Other one, Paul here. If you saw yesterday's video, I went over basically how to trade crypto with no indicators. Today I'm moving to doing this strategy with Forex, so I'm going to be looking at, well, I'll look at Forex, I'll look at some of the main ones that I usually look at, and we'll also look at gold, and we'll basically be using the same formula that I talked about in the last video, by not having any kind of indicators, and seeing what the results are, because I'm making this video right now, the market is open right now, so it'll be a good time to see it in action, and seeing how this would work for anyone wanting to do this strategy. The strategy does involve you go to the higher time frame. I recommend doing like a 6 hour, and then you move on. And once you get an overall direction of the direction, you then go to a smaller time frame and look for a good point to get in for your entries. So anyway, let's go look at the charts with a blank canvas on Forex, and I'll probably be looking at some gold here too. Okay, so before I begin, I'm going to kind of go over this on a demo account here. I'm kind of practicing, doing this myself with, no indicators other than reading the candles itself. And this one trade here, this is on a demo account, but the Japan yen here, I'm currently up $68. I'll check that at the end of this video, but that's basically off of having no indicators and going by what I'm seeing. So let's look at a couple pairs here. So we are going to let's look at Japan real quick, because that's my current trade on the demo account. So first off, let's remove all these. Okay, so this is a complete blank screen, and this is what you have to go on. So what I do first is I go look at the 6 hour. We do not make any trades based off of the 6 hour. What I look for is a trend, and it has to be, in my opinion, it has to be 2 or 3 good strength candles in that direction, either going down or up. I have to see at least 3 good strong candles, and we see that on the 6 hour with the Japan yen here. We see a good strong candle up here, strong candle up here, strong candle up here. So we have like 18 hours of it going up, even longer. So this is a good trend of it going up. So what do we do in this now? You can go into you can do a 3 minute. You can do it on a 3 minute, but I personally prefer having a little bit more of a wait time, so I do it on a 15 minute. Any kind of shorter time frame will still work for the strategy. What you have to look for is the candles to weaken. You have to look for it to go in the opposite direction, and then you have to look for that candle to start getting weaker. So we see a couple examples, and what you want to look for is you want to look for a tail, and when we're looking at it on the 6 hour, I'll just show you real quick. When we looked at it on the 6 hour, you saw 3 or more strong candles here. So what you want to look for on a shorter time frame here, like let's do 15 minutes, and you want to look for the candle to start weakening. So basically, you don't look for it going up. You look for it. If we're looking for an uptrend here, we're looking for red candles, and then we're looking for the red candles to start getting weak. So much like right here, you see, because you're seeing more of the wick, you're seeing more of it getting weaker. So this is how I made $70 so far on this trade, just by following this little formula here. But let's just look at a couple other scenarios here. Since we know for the last 16 hours or so it's been going up. We want to look at a couple examples here. So we see the candle starting to get weak. Here's a weak candle. And these have some pretty low volume here to these. These are some good ones. You just want to catch it going down a little bit. It has to go into the opposite direction and it has to go down. And then once it starts going down, it has to start weakening in the opposite direction because the overall trend is going up in this scenario. So anyway, that is the Japan yen. I kind of want to look at an example of some other ones. Let's look at the British pound. And this one, let's look at it on the 6 hour here. Okay, so judging by the 6 hour, what can you tell? What is the overall trend here? You see at least 3 candles here of it going down. So your entry point would either be on a 15-minute, 5-minute, or a 3-minute, whichever one you want to do. And you want to wait, since we know the overall trend is going down. Here on the 15-minute, we want to wait for the uptrend here to get weaker, which it hasn't happened yet. It's still in an uptrend. So we want to wait till we see that this 15-minute candle gets a little weaker. That hasn't happened yet. So let's go look at another one here. Let's do the Australian dollar. Let's look at the Australian dollar on the 6 hour here. Same thing for the Australian dollar. We have a good direction here. We have at least 3 candles, 18 hours of it going down. So that's why we go here to our smaller time frame. We'll look at a 15-minute. And what we want to look for is it to get weaker. We want to look for, and right now it's not getting weaker. It's going up. So you want to wait for that candle to start getting weaker. It's not currently getting weaker. It's going up. But if I were to stay in this trade, I'd wait for that up candle to get weaker. So let's go on to another one. Let's see what else we got. Let's just do the Canadian, and let's look at it on a 6 hour. Okay, so for the Canadian dollar here, we have 3 solid candles of it going up. So what you want to look for is go to a smaller time frame. Let's do 15-minute. So right now, since the signal of it is going up on a 6 hour, you want to wait for that red candle to start getting weaker. And right now it's not showing signs of it getting weaker. It's not showing the tail. You'll notice it starts getting weaker because you see both sides of the wick. And those are really good indications that the bears and the bulls are fighting. So you want to see the candle get weaker before you make your entry. So let's real quickly look at gold. Gold is a lot more volatile, but let's look at it anyway. Let's look at this on a 6 hour. Okay, so gold is a good example here. We don't see 3 solid candles, but we see 2 solid candles of it going down. So I'd still probably would say it's more than likely to be going down because it has 12 hours of it going down. So we go here to a smaller time frame. Let's check the 15-minute. So the same thing here. We want to wait till this the up candle here gets a little weaker. That hasn't happened yet. But we know the overall trend is going down, so all we would have to wait for is the candle to show signs of getting weaker. And then you can come in and out with your scalps and your trades. So anyway, that's using this formula with using no indicators. It's using the Forex, and that's basically how. Now let's check on my demo here real quick. Well, it went down a little bit, but I'm still in profit, so it still works, and it looks like it's still going to be going up because the overall trend. Let's look at Japan yen real quick again. Let's look at Japan yen. overall trend is up. So personally here, I'd be waiting for it to go down a little bit. I'm already in the trade, but if I were to do another trade, I'd wait for it to come down a little bit, have a red candle, and wait for that red candle to get weaker. And that's when I would get in. So that's kind of how you do it with Forex without doing any kind of indicators.